Carl H says, can you brag about some of your RPM winners from when you entered them to how long usually you hold them before you exit them? Thank you. Okay, so what he's talking about, what Carl's talking about here, is the married put positions. Okay, the married put is, well, our preferred approach for the married put structure is we're going to buy a stock. We're going to buy a put option that's several months out in time, usually looking at least 150 days out in time. That puts the time decay curve in our factor. This is insurance for your stock. It's like flipping the covered call upside down, as you saw in that initial profit and loss chart. We'll take another dive deeper into that. But we want to keep the risk to single digits. And we don't want to go too deep in the money. We don't want to, if I go 50 or 40% in the money with a married put, I could only have a 0.2, 0.1, 0.5% risk on the position. But then I'd be in a situation where my expectancy of profit is so low because I'm too deep in the money. So there's some restrictions here as to how you set up the structure. And we have some specific stock criteria that we look for as well, and a specific, stock list that we like to use that's proven to work for us over time. Now, all of this is based, of course, on the rules in our full course, The Blueprint, which walks through the initial setup, why we're doing it in that fashion, why it's beneficial over other just simple married put structures, buying an out-of-the-money put 1 month out in time, and so forth, as well as the 13 different income methods that we use against this initial longer-term structure. And what are the income methods used for? Well, the income methods are used to help us lower the initial at-risk on the trade by either generating income or using the put option, our second working asset, in our favor in multiple ways to eventually get to a position where we're bulletproof. We have no risk to the downside, still several months to go to expiration, and unlimited upside potentially on the position. Okay, so that's the initial structure. Let's take a deeper look. Let's go into the search tool. And we've got Harmony Gold. We have ADMA Biologics. These are the positions that match our criteria, our preferred criteria. This is where Ernie and I start when we open our positions. In fact, 95% of the married puts that Ernie and I open and post in the Fusion portfolio radioactive trading, which, Carl, we're going to jump to in just a moment. In that case, they come directly from this list, LTH and Palantir Technologies. Now, lifetime LTH here, group holdings, currently trading at 31.31. It's up 8 cents today. And we're showing that we could buy the December 35 put, 246 days out in time, for a midpoint price around $7. A wide bid-ask spread here. But I think $7, $7.10, maybe a little bit less, maybe $6.90, maybe $6.80 is a reasonable price for this put. And this would give us a risk of 8.6%. Which means over the next 257 days, 246 days, my apologies, if I do nothing, the worst case scenario that could happen at December expiration, 246 days from now, if the stock is below 35, I can only lose 8.6% on the position. Now, let's go ahead and take a look at that profit and loss chart. And in this case, like I said, we have the stock at 31.31. We have December 35 put at 7, which I think is a reasonable price. Gives us an at-risk of 8.6%. And again, that is the worst case scenarios position. Yes, the break even is at 38.31. I bought a stock at 31.31, and I do have a technical break even at 38.31, $7 higher, the price of the put. That's if and only if I hold the position all the way to December expiration. Make no adjustments on the trade, accept no dividends on the stock if the stock pays dividends. And I actually hold it all the way to December expiration. The stock stays below 35, and I just close the position. That's the worst case. You can see here that the halfway point on August 20th, 125 days away, halfway between now and expiration, our break-evens at about 34. Closer in time, let's just go 45 days out in time, 46 days out in time. July 2nd, redraws the chart for us. You see our break-evens at about 32.50. Let's just call it that. We'll call it, it's less than that, but it's about 32.50. That's not too bad of a move for 45 days. We think the market's going to recover, is it? But again, I have the advantage. What am I going to do now? Well, I have the advantage on this position to sell different premium. Not a lot of premium here at the 35 calls, but income method number one of the 13 different income methods, I could sell a call right now, generate about 72, 73 cents, maybe at midpoint. And what did that do? That took the risk down to 6.9%. And if the stock is here in that 45 days at $35, remember, below my break-even point of 38.31, we're at a profit of about $250. It says May. Oh, it's May 16th. Did I say May? I did say May. 46 days after May 16th. My apologies. But still make a 6.7% return, and I lowered the risk down by 2%. This call expires worthless. I can sell a 35 call for the next month, or if the stock is moving up, if the stock's at 34.50, I might sell the 37.5, 37, whatever is available. And that's the idea. I'm lowering the risk, but I'm expecting movement in the stock. I don't want to sell the call right away. I entered this position because following the SIGA model in the blueprint. And I think that the stock's going to move back up. The market itself is going to move back up. I've given myself time to do so. All right, so why am I going through all of that? Carl's question was about RPM winners from when you enter them, brag about them, and how long usually you hold them before you exit. Okay. The reason why I went through this example and I went through the search specifically with LTH, and why specifically to say $7 is a reasonable price for this put, probably a little bit lower, is because if I bought the stock at about $30.98 and bought this put, my apologies, Carl, for $7.10, I'm carrying a risk of about 8% on the trade, still 246 days out in time. Same scenarios, break even at 38.08, but that's only at expiration. Why these numbers? Because LTH, I'm sorry, let's go to Fusion real quick. Let's go to radioactive trading. I'm logged into my Fusion account. Fusion subscribers, they can log in and go into the Open Trades trade tracker. LTH was the position that I opened yesterday from the married put search. So it's a new RPM that was entered, stock price at $30.98, and I got filled at $7 for the December 35 put. So with the stock now at $31.31, I'm still a little bit under right now, although the stock has moved up. The put's still holding its value. I'm only at a 7.9% risk on the trade to December expiration, as we discussed. But this was just opened for Fusion subscribers yesterday. So $7 is a fair price, especially now the stock's at $31.31. I'd expect to get $6.80, maybe $6.70 for that 35 put, much lower than what I got filled at yesterday. In addition to that, Ernie just opened a new trade today too. ADMA, we saw that in the list. 95% of the trades that Ernie and I open in our Fusion portfolio come directly from that list. And of course, today I managed position on holdings. Yes, all of mine are kind of negative. Trex, it's closed. It was for a loss of 8.5%. That one just got closed today. Ernie's got 1, 2, 3, 4, 5, 6, 7 positions open. I'm sorry, I counted that one. 6 positions open. 5 of them are bulletproof and profitable. I'm at a small risk, which I'm going to go back to the power options and take a look at the portfolio in just a moment. But yeah, that's what you get at Fusion. You see our actual trades, and every time we enter a trade, we enter a brief with the trade as to why we're doing it. I want to go back to the portfolio for a minute, and I am going to answer Carl's question. Don't worry, folks. But I want to go back here to illustrate something. I'm looking at the portfolio, and I have the stock analysis view, which has added 6 extra columns over here on the right that we're going to take a look at in a moment. Okay, there's LTH is up 1.1%. Recent trade from a couple months ago. Kraft is down 1.2%. On Holdings is down 27.8% with the recent pullback. Pure Storage is down 30%. Trex, which I decided to close, as you saw, for an 8.5% loss, is down 38%. So what do we see here? With Pure Storage down 30%, the current position is only at a loss of 1.5%, and I have 64 days of insurance remaining in the position. Only 30 days left in Planet Fitness. With the stock down 5%, I'm only down 1.8. 28% decline on holdings. We're only down 4.4%. I just adjusted that one today. Rolled the put further out in time to stay in the trade because I think it's going to recover. LTH, there's that 0.9% return I mentioned with my prices. And I'm about even with Kraft because volatility is pushing the put, as you can imagine. Changes in the VIX. This is moving the put up and down. There's ways to play that. I just haven't yet. And I actually haven't recorded, I think, the dividend I'm going to receive in 5 or 10 days for this position, which would put this down to only about a 0.8% loss, I believe it is. But what are we seeing? I'm in a stock that's down 28%. I'm only down 4. Down 30%. I'm only down 1.5. Down 38. I did take the loss of 8.5. Up 1.1%. I'm at a 0.9% gain because the put hasn't lost any value from where I got filled yesterday on the trade. Now, Carl asked about winners. I'm not bragging about winners right now. I'm bragging about losers. 28% decline, 30% decline, 38% decline. Single digit losses. And these can be recovered because I still have time on most of these trades, especially the one I extended on as well. And Kraft, I'm still 274 days. This position, I could potentially bulletproof. I'm only holding the 3250, but I could potentially bulletproof that today. If I made a decision to, I could roll the put closer in time, lower my cost basis, and then sell a call, and I'd be bulletproof on the trade in the position. But that's not my expectation for the stock. That's one of the reasons why the blueprint continues. So I'm bragging about losers, not winners. Guillermo is actually, we're going to get to Guillermo's second question after we cover Carl's here. But Guillermo added shortly after Carl, he says, so glad I'm in a married put for BABA. Stock down 23% from where I bought it. But where the married put, my max risk is only 8%. And he wants to go on and says, is there an income method to consider when the stock is down so much? Yes, and we're going to talk about that, Guillermo, in just a moment. You've got your specifics. I'll use your specifics for that. But what are we doing here? I'm not answering Carl's question. I'm bragging about losing. I'm bragging about losing only 1.5%. The stock's down 30%. Could I have managed it with covered call positions over the last 4 months and cut the risk down by 28.5% in 3 months by selling covered calls? The stock fell down? No. You're gaining maybe 5, 6%, maybe 7% with increased implied volatility. You're still down 24%. And what we're talking about here, I don't have a graphic to pull up, talking about Gambler's Ruin and the Martingale. If you have a 25% loss, you realize a 25% loss in your position. What do you need to get back to break even? Not 25%. You need 33%, sorry, stay here, to get back to break even. I had $1,000 in the trade. It dropped down to $750. I need to get back down to $1,000. What do I need? I need $250 to get back to break even. That's 33% of what I have left. You take a 40 or 50% loss, you need 100% gain to get back to break even. I take a 1.5% loss. I just need a 1.8% trade win on my next gain to get back to break even. This 8.5% loss I took on Trex, I only need about a 9.7% gain, 9.8% gain to get back to break even on that position. With a 38% loss, I need about a 55% gain. 30% loss, I need about a 45% gain. 28% loss, I need about a 37% gain with what I have remaining to get back to break even. That's the power of controlling risk that Guillermo just mentioned. We're going to look at his position in just a moment. We'll brag about winners. Okay, that's bragging about the losers. Carl says, can you brag about some of your RPM winners? Absolutely. We're going to go into the track record here. You're going to be able to see a little bit more, potentially, than you usually see when you're not a subscriber to Power Options. If you just go to, Radioactive Trading. You're not a Fusion subscriber, Carl. You just go to the track record here, and you just see some of the basics. You might take a chance to get a little bit more of this as well. So yeah, I'm at about a 60% success rate. And this is important for your follow-up question, the second part of your question, Carl. My average win is 6.7%. My average loss is 5.2%. But if I started with $10,000 after 100 trades, I'm actually higher than this, but it'd be up to about $37,000. All right, triple the gain. We'll look at earnings in just a moment. Now, here's a winner that's not a winner. I don't want to brag about it, but make my trip limited. This was a really good stock position. It returned 80% on the trade. I only made 32.4% in 200 days. Okay. Now, why did I only make 80% on the position? And it's because at one point, let's go to view details. It takes a while to load. It's reading through the whole thing. At one point during the trade, I kept rolling it and kept rolling it. And at this 100 strike call, that put me at that profit at 32%. I think the stock was at 98 something. Let's see when I originally did it. Oh, I'm sorry. I got to go back one. I apologize. Let's go back here. Rolled the put out in time from August to September. That's income method number 4. Rolled the call, the September call, and the stock was at 93.92. And that was on, I apologize, date here 8/16. On August 16th, I rolled the put up, or I rolled the put further out in time, kept the 85 strike, and I moved up to the September strike the next month out 100. Now, at expiration, the stock was at 108.47, and I allowed this standard caller to be assigned. And the September call was closed. And I was going to use another income method to stay into this position, and I didn't. Okay, I allowed this standard caller to be assigned because at one point between these two expirations, between when I made the adjustment on 8/16 and September expiration, MMYT went up to about 145, 135. There was no point in rolling it. I was going to be assigned for 32.4%. But that's why it shows that the return is at 80% because at that time frame, the stock had moved up to that higher strike, those higher values. The stock from my original purchase price of 61.23 had gone up 80%, but I let it be assigned at 100. So actually now I'm not bragging. I would have done better just holding the stock. But of course, it was a bulletproof trade, and if I had not sold the call, I would have done better. Let's go back in time. I'm going to go to the early days, Carl, back in time. I think it was my very first or second, or third or fourth one. This one always cracked. There's one in here that always, there it is, Silver Wheaton, 58.9% return. This actually would have been higher, but what I did towards the end, Carl, is I used income method number 4 a couple weeks before the end of the trade to extend it another month. What that did is it gave me a 30% guaranteed profit on the position if the stock fell after earnings with an unlimited upside because I didn't sell a call. So one of my first ones was a 60% return in 200 days. This one, Yamana Gold, not bad, 13.4% with a stock up 17.3. So I still made 70 to 80% of what I expected to make. I think I want to go to page 3. I clicked page 4, Carl, but I think I want to go to page 3. And okay, some of this history is missing. And none of these are the ones that I really wanted. So I think it's on page 3. I'm going to brag about a loser, Carl, if you don't mind. Another loser here. It's not this one either. I see Penn on here. No, I see Foot Locker on here. Foot Locker was actually a losing trade. We made 9.1% on it because I made use of income method number 12. I apologize, folks. Go to page 2. I'm looking for Penn Gaming. PE, there it is, Penn Gaming. 10.3% return, and the stock was down by 5.7%. How could I make 10.3% on a bullish structure? Well, I implemented income method number 12 on this trade. When some bad news started to come out, some potentially bad news on gaming, and they actually, this is back 2018. So there was conversations, of course, of different aspects going into that. I was only in it for 35 days, but there's conversations of, I'm losing the term, Carl, but regulation. Penn Gaming, of course, one of the online gaming services. And so I said, their earnings are coming out in a few weeks and 2 weeks, and I'm hearing all this noise, so I'm going to go ahead and buy a second put on this trade. This is not accurate. I'm going to have to take a look at that history. The stock was actually down about 22%. And we made a 10% gain. There was another one in here that there's Planet Fitness. That's why I stayed in it, even though I took the 8.5% loss, because in 2018 it worked for me. Made 24.2% with the stock up 37%. Here's one, Yandex made 1.6% return when the stock was down 7.8%. And so that's just some of mine that I like to discuss and talk about that we go back through time, Carl. Oh, I'm sorry. Let me go back to the tracker. It's going to reload. It's going to take me half a tick here, so just wait a moment. All right. As you can see, varying degrees. Fortinet I stayed in for 480 days. Why? Because I could have taken a 7.2% loss about 200 days in, but I decided to stay in the trade, turned a loser into a winner. Not all of them work out that well, but some of them do. Starbucks, a 9.2% return with the SPX down 1.2%. Here's another one, Element Solutions, loss of 9.4% on the stock. We took a 1% gain. Is that my target for the position, Carl? No, I want to make more profit than that. My target is about 1.5%. But if the stock doesn't perform the way I want, I had low risk to begin with, and I can turn a losing trade into a winning trade, I'll take it. But you see some 77s in here. You see some 97s. You see some 193s, 374, an 81, 594 on semiconductor. My average, that's the answer to your question, second part of your question, my average holding time before you exit them, you can see that some of the ones that are only 77, this was just a loser. I thought it was going to recover, and it didn't. Trex, which I'm going to close, I've been in for a while. I did use income method number 9 to roll the position out before. That's what got me up to 8.5% instead of about 4.4%. And everything in the last 45 days took a dump. But I'm only down 8.5% with the stock down 38% as well. So my average personal hold time is around this mark, maybe a little bit less. I think it's around 190 to 210. It's somewhere in that wheelhouse. Averaging 6.7% on the winners, only taking 5.2% on the losers. And you just saw some big losers in there, Carl. And about a 60% win rate. Now, I want to go back to the track record, look at earnings very quickly, Carl. And the reason why I wanted to take a look at earnings, and again, I'm sorry, it's got to load all of the information. He has several more trades than me. Yeah, I think I'm at about 108 trades total with the RPM. He's at, no, that's not that far off. About the same win ratio, about 60%. Ernie averages about 11% on his married put positions with taking a loss of only 5.1%. Slightly different approach. But look at some of the numbers here. 365, 1586, 354, 331, 524. There's some 43s in here. Bulletproof Norwegian got a 3.5% profit when the stock was down 7%. Turned some losers into winners. Had some big gains up here too. The stock's really Royal Caribbean twice, different times. But if I go to some of the other ones here, so we've got some long positions, and Ernie is in some long positions right now. I think he's got another one that's been in for 1,100 days. But see, Ernie tends to stay in positions longer. I'd say his average is closer to above a year, Carl, 380, 390 in the positions. 419, 321, 601. Okay, so this one 418. So this is about average here. But yeah, I'm about at 205, 210, let's say. He's probably closer to a full year, 350, 360 days. And he'll milk those trades consistently with those. So he has a better average gain on his winners, and I have a slight edge on him, wins versus, I think now we're probably about even with closing that Trex position, even though I'm staying in on, which I hope to turn into a winner, but it's not a competition. But by the length of time that he stays in, going through the different markets, bulletproofing trades and holding bulletproof trades more often, as you saw with his 5 bulletproof trades now and continuing to milk them, what that calculation, this is not his portfolio, this is the trade simulator tool. But if you make 11% on your winners, lose 5% only on your losers, and you're right 58% of the time, over time, you'd expect, over 100 trades, you'd expect a $10,000 account to grow to $411,000. I'm more active and take more chances than he does. And I tend to flip-flop a little bit more too, Carl. So That's your question. I bragged about some of my winners first by bragging about my losers. And I did show a few winners as well. And as you saw in the main Open Trades trade forum, Ernie can brag that right now he's got 5 bulletproof positions. Some of them he's been in for a while, true, but he's got 5 bulletproof positions he can continue to milk. And he just opened what? A new trade today that came directly from our default search criteria, our preferred search for that structure. I opened a new one as well, Lifetime Holdings, yesterday, and just adjusted the on one to stay in this position. Yes, I increased my risk to 13%, but I have a strong feeling that eventually it's going to recover. And I gave myself, as you saw, 155 days to continue the trade. But I'm going to be more aggressive with that one. And I set that out in the briefs. I'm sorry, the brief we sent out today. Going to move so anytime we make an adjustment in the Fusion portfolio, we add what our thoughts are. So it's not just, hey, you sold this at 2050 and you bought this at 728. Moving out to September, we are putting in an order intrinsic value, blah, blah, blah. Rolling up September, it increases the risk to 13%, but it lowers the break even to $51.75. This is $7 lower than I initially purchased the stock. Yes, it's at 42. My original stock price was $58.75. Then I added will likely be more aggressive with income methods due to the higher risk. And one of our members, Thomas, did send me an email and says, what do you mean that you're going to be more aggressive with income methods on this position? Well, usually when I'm in a married put, I like to wait for the stock to move up. You've heard me talk about this before, Carl. This is going to relate to maybe Guillermo's question in a moment. But my expectation, I have the 45 put now that we bought. We rolled down the 45 put. My expectation is that on is going to be close to that 44, 44, 50, 45 strike within the next 20 to 30 days. That gives me opportunities to sell calls at a higher strike price for better premium. Or if it goes above 45, the market does turn as we expect. The next 2 to 3 weeks, on is actually above 45. I'm going to move this put following income method number 4, one of the 4 ways that we manipulate the put option in the married put techniques to cut the risk down by half. I can get it down to 6.5% if it works out as I expect, still with 155 days to go. But what I answered to Thomas is I did extend the trade 155 days. Let's call it 5 months, what it is. But I'm taking a risk of 13%, which means that I have to target, I'm expecting movement in the stock. And the underlying movement of stock, remember, I'm going to make more on the stock than I'm going to lose on the put as the stock moves up. It's a positive delta position, as you can see on the profit and loss chart. But just by standard definition, 13% worst case scenario in 155 days, I need to make about 2.5%, 2.6% per month in realized or unrealized value in order to hit break even. So I'm going to be more aggressive with this one. With Kraft Heinz, I'm out 245 days still, I think it was, and I only have a risk of 5.2%, and that doesn't account for the first dividend I collected or am going to collect. So really the risk is probably around 5.1 or 5%. I only have to generate about 0.5% income, which I can easily do in Kraft, just waiting for it to come up a little bit more in that case. And so that's the goals. That's what the blueprint teaches you, not just this proper structure that we use, not just the 13 different income methods and how and when to use them and how to incorrectly use them, but also in that case, Carl, the proper structure for the income method so you don't get in trouble targeting your goals, targeting what you want. All right, you want more information about the blueprint? Hey, you can just click on it here, click on from our store. You can view the full table of contents for the blueprint. Some more information there on this as well. So you can take a look at that, the full table of contents. Just go to the Power Options store, click on the blueprint, or the store at radioactivetrading.com and click on the blueprint as well.